U.S. of top producer, and I'm Jerry Gulke here, who's going to give us a reaction to today's reports.
Good morning. Yes, the report is kind of what I would call basically a whole hummer. Wasn't any surprises. If there was going to be a surprise, it would have had to come in the yield being reduced, and that was projected last month for corn and soybeans, and the USDA left that unchanged at 42.9 for beans and 163.5 for corn. Even considering the fact that the ratings have dropped some since June, when on a week-to-week basis we are not rated as high, but still rated pretty well. I think USDA wants to wait and see what happens, and maybe look at the problem in August. If not, then maybe then even wait until the September crop report, where they actually go out and count ears and pods and stalks and that kind of thing, and get a better handle on it, because I don't think they want to make an error and assume that we are losing yield and then find out that we did it again or something. But weather has been a big influence, and that's going to be the predominant market maker after we digest this report this morning. But basically the report did lower the ending carryout for corn as expected, because you understand they took the June 30th stocks and all positions report and the acreage report, and this extrapolated that into the supply and demand, and most everybody in the business had done that. So nothing really changed, with no real surprises. But the stocks got tighter in corn and not so large in beans. And of course, if you've noticed in the last week, we've had an explosion in the grain prices, and which was not unexpected, because we had discussed this that after the June 30th crop, that it was a market maker or a game changer, so to speak, and it was a crop that would change the outlook on things for quite some time to come. So with the huge increase we've had in all commodities, corn, soybeans, and wheat, rapeseed even, I would expect a pullback in here going into a weekend. However, we've got a ridge building system out in the east, and already in the east, and then moving out somewhat with the new front that comes in, and then theoretically moving back in again. And that the projection of the weather shows it from almost twice a day, showing it not so bad, but all of a sudden it's bad. And it was interesting yesterday. I'm currently at our Beaver Creek annual client conference, and we have respected speakers from all over, and one of them is Mark Russo, who's well known in the weather circles, and not one to be radical in one way or the other, but yesterday said, we've got a ridge coming back in here. It looks like it's coming back in the last half of July. El Nino, La Nino event has been kind of projecting this and predicting it, and it's coming at a time when it could likely affect beans more than corn, depending on when it arrives. What we don't need, I guess, from a production standpoint, is hot weather under what looks like to be not such a hot crop in beans. Production-wise, and our clients that came here, I would say 80% of them, or only 20% of them, thought they had a real good crop. And rest of them said, we've got too much water, we've got shallow roots, and that is a situation that we don't know how those new technology seeds are going to react. We've got a lot more roots, but they didn't go deep, and so they're telling us that the nitrogen went down, and but the roots did not have to go down back for water, and thus if we get some hot weather later on, it could stress the crop, and of course shallow kernels and all that stuff, which we really probably won't know until we see the crop counted in September. But in the meantime, the market's going to look at this, and if you look at the carryouts and so forth this year, we're down to in corn down to 1.378 for this year's crop that we will end the year for next year, and that's going to be down from this year. We're going to use more than we produce because of ethanol, whatever. There's line items in there that show that exports maybe go up a little bit or whatever, and but at any rate, if you look at it, and that's at 163 bushel and a half yield, which is a near record again. 1 bushel an acre is about, harvested acres are down to 81 million. That would be another 80 million bushels. So it would not be hard to conceive that we could see crop yield down at 161, which is 160 million bushels less, and keeping the usage the same, then you're down to a carryout of about 1.2 billion bushels. It's awful snug. That 1.2 billion is not what like it is now versus the usage we have like it was 10 years ago. Would have been a huge crop. So the market's got to look at that. And the bottom line was, like we mentioned in June 30th comments, the market can ill afford the crop problem. It needs the acres that are there and that were less, and it also needs a good crop. Now, in my supply and demand situation, I've lowered the crop planted acres and harvested acres for corn another 500,000, somewhere in that neighborhood, because I think all said and done, we've got more prevent planting in Illinois than we think, and a lot more than we think that the government recognizes so far in South Dakota, North Dakota, and other places, and the drowned out spots. I've seen aerial shots, and it's going to be a big, maybe a surprise in October 12th when the government revisits those acres again. In soybeans, we're going to go from about 175 million carry out this year to 360 next year, based on 42 bushel an acre yield, and 32.9, which is a little less than last year. However, here again, we could easily lower this crop a bushel or two, say 1 bushel. That's 78 million acres per bushel, 70 million bushels per the 1 million acres, and that takes you down to under 300, and suddenly we're back where we were last year at this time, after having a billion bushel more crop in South America, and we're using all that up. And we have contacts throughout Europe, and in particular some very good people in the soybean area, and they're suggesting that the Chinese could exceed expectations again, maybe getting to 56 million metric tons, which would then eat up another 60 to 75 to 125 million bushels of demand that the market isn't capable of realizing right now, and that the USDA does not have dialed in, nor do some private estimators out there. So there's a lot of unknown out there. It's China and it's weather. We had our chief economist that we use, Vince Malinga, saying yesterday that China's economy is slowing down somewhat, but it's still pretty robust. And the question is, will they use as much commodities next year in 2011 as they did this year? If you notice by today's export report, sales report, there's a lot of buying for next year's beans again. The one thing that a lot of people don't have penciled in is another fall export program like we had last year in soybeans. Most people think that we're going to lose that to Brazil, but yet when you look out into August and September, China is buying beans for August and September delivery from the United States because we're cheaper, and we're actually cheaper than Brazil in October. So there could be some surprises out there, and I guess sometimes it's not so how much higher that we think we can go, it's where we may not go, and that's what I'm looking at now. Is that I put a bar in the sand and say, you know, we have a lot of demand out there for prices that we saw just a week ago or so.